Hi everyone, how are you today? In this video, I'm going to talk about why it is interesting to invest in the stock market, and I'm also going to mention the golden rules that will allow you to be a successful investor. First, let's compare the different interest rates that we have access to as an investor. To begin with, we have savings accounts. On average, savings account offers a return of less than 1%. This is the most common account that we usually have at the bank. So if, for example, you want to invest €1,000 in a savings account, your return would be €10 a year. Second, we have time deposit accounts. This type of account requires a minimum amount and must be left on the account for a minimum period of time. A fixed interest rate will apply during the term, and you can only withdraw the amount after the term. On average, the bank offers around 2.18% interest rate. So if you invest €1,000 in a time deposit account, you get in return €21.18. Next, we have Treasury bills. Treasury bills are also offered by banks. They are considered as short-term investments, meaning that you can deposit your money for a period of 1 year, which will generate an interest rate of 2.23% annually. So if we do the math, €1,000 invested in Treasury bills will give you a return of €22.30 after a whole year. Next, we have bonds. Bonds are offers from a company or the government to investors who are willing to finance their project. So for example, the government may need money to develop schools, roads, and infrastructure, and therefore they will offer bonds to help them achieve their project. Companies can also decide to expand their business, buy properties and equipment, invest in research and development, and therefore they would also need money to do so. By investing in bonds, you will get on average a return of 7% interest rate per annum, and you need to leave your money for a determined period of time depending on the institution. And lastly, you can participate in a bond through banks that are linked to a specific company or the government. Lastly, we have the stock market that outperforms the previously mentioned investments with an average of 12% interest rate per annum. Now we are going to talk about the golden rules that will allow you to be successful in this type of investment. Rule number 1 is to invest early, because the earlier you invest, the earlier you'll get to financial freedom, and that is our goal. So for example, if you invest €10,000 at 25 years old, by 65 years old, you will get a total of around €217,000 with an annual return of 8%. The second rule is to invest regularly. For example, you can deposit money into your account monthly, quarterly, or annually, depending on your current situation. And by doing so, the more money you have to invest, the more your return will be higher, so the more money you will end up with when you reach 65 years old. The next rule is invest long-term, because long-term investing solves the problem of short-term volatility. What I mean by this is that sometimes due to economic, political, or natural events, the price of a share fluctuates and it swings up and down. Therefore, there are times when the current price will be lower than your buying price, but on a long-term basis, the price of a share will always tend to be higher than 5 or 10 years ago. After all, companies do need time to grow, so prepare to sow your seeds in great businesses and let time do the rest. The last rule is to use diversification. The management of risk should always come hand in hand with your choice of investment. One way of containing risk is through diversifying or by spreading investments around and away from one single asset class. As the saying goes, do not put all your eggs in one basket. Moreover, try to allocate your capital evenly to a number of stocks in different industries or sectors so as to not put too much risk in one area. Have a good balance in your investments. So that's it for today. I hope everything was clear and that you've learned something new. On our next video, we're going to talk about the different investment strategies and how to read charts. I hope to see you there. Have a good day and goodbye.